Ladies and gentlemen, K King here. Welcome to the Daily Update. Hope you guys had a good day trading today. Market is down about 3% there. On the S&P Nasdaq, get hit about 4% negative. Semiconductor 5, Dow 2.3. Same with the Russell 2000. Transport got hit 4.2% negative. Banks down almost 4%. Energy continues to make a green print in this bloody red trading days in the last couple weeks. I think energy's been up every single day last couple weeks. Biotech down, looks like healthcare down. Home builders got hit close to 5.5% there. Utility up 1.3. Also another interesting sector there. These two sectors have been going up while the other sectors have been down, going down. Retail 4.4%. Emerging market 3.7%. Bitcoin down 6%. Gold, silver miners continue to make a move here, which is a good sign for precious metals. Miners notably up about 2.5% there. Dollar up, oil up, treasury bond flat. VIX popped. Let's go to the S&P 500 ETF. Spider. 65-minute chart here. So this is where we closed on Friday. And it looks like we slightly gapped down on Monday and it's been tanking ever since. And look at this. Now we have total 4 down gaps the bears are working with, including this small down gap right here. We also talked about that midterm moving average. Bulls are really scared of that midterm moving average because it does carry impressive resume. And Bulls gotten slightly close to that level, and inevitably that tankage continues here after having a little meeting there with the midterm moving average, and another down day today, making lows right here. You can see another lower lows in the short to micro term. And so looking at the price action, so obviously we talked about how, in the short to midterm, we do have this market favoring the bears with the lower highs, and the benefit of the Dow goes to the sellers. However, you can see this is a low that bears are aiming to break below, which is 410 level, right? Since kind of late February, mid-late February, we have not seen a real, another cultivation of lower low yet, right? That's going to be that important pivotal level. Because we did see some sort of bounce here, and bulls are not able to find any kind of traction with that bounce. I mean, we did see that micro-term bullish event. However, quickly that's been getting dwindled down last couple trading sessions, especially more down gaps are adding to this turmoil we've been in this entire year. And with the making new low here, things are looking extremely gloomy for the buyers. So I think, and you might ask, well, is there any hope for the bulls? Looking at structurally and looking at the price action alone, as of today, no. If they had anything, they should have continued on here and fill this down gap. We talked about how the down gap doesn't get filled. Bears ain't going nowhere. They're gonna be around and they're gonna come back. And you can see that this down gap was never filled, and they continue to develop their another few more down gaps, and they continue to bring it down. Only way bulls are going to make anything work is that they must defend 410 and not let the bears cultivate that lower low, right? What about tomorrow, okay? I'm a very bullish in the market. I've been buying the dip very aggressively, and I'm very scared. Well, you're looking for some kind of a miracle shenanigan gap up and then get up and fill both of these gaps. That would be, only way for you to, if you're dramatically and desperately seeking some sort of bullish run, that's kind of what you're looking for tomorrow, is some kind of a unforeseen shenanigan surprise gap up, and then it gets up to fulfill both of these gaps. And with that midterm moving average continue to decline, things are not looking so good right now. Because you can't change the trend in just 2-3 days of trading sessions. It's gonna take more, especially we're dealing with this kind of a market climate there. Let's check out that oscillator and see if we can extract any more information. So, and this might be a good news for the bulls, maybe. We don't know that yet because we are hitting the extreme oversold level. Keep in mind, just because if it hit extreme oversold level doesn't always mean it's gonna be the bottom. You can see I go all the way back to what, like January, late January. There are 4 instances where we did see the oscillator hitting the extreme oversold level. And this was only one time in January where we did see about a week or so of bullish run. Here we saw maybe a day or two and then it tanked. This one kept going down despite the fact that we did see that oversold level. Inevitably though, we did see that bullish divergence, and that's when we saw that bullish move. So what about today? What about going into this week? It's we could potentially see a kind of oversold bounce, but that alone is not going to, you know, completely eradicate this bear's presence in the market in this month of, well, February and in the March. Bulls gonna have to work more. They need to see a cultivation. It's gonna take weeks and weeks. 410 is a level that bulls must defend if they do not want this downturn to continue. They will require, if bulls need to see any kind of green, they would require to see some sort of a surprise shenanigan gap up, potentially because we're in this oversold level. I'm gonna come back for you. We'll reassess the situation. Enjoy your evening and good luck trading tomorrow.